And did you hear something from my computer, like recording in progress?
Yes, that's what happened.
You heard that?
Yes, I heard that.
Okay, I'm recording this. So we have this new day opening gap, and
Mm.
it's a big one. So we denote it in our charts and watch price. So it because it can act as a dynamic support and resistance. When price is below it, it can act as resistance. When price is above it, it can act as support. Also, the new day opening gap's high is around the consequent encroachment of this red colored fair value gap, red shaded fair value gap here. This is red
Okay.
or pink, I don't know. Don't ask me. I don't know about colors. But whatever it is around the consequent encroachment. And the low is a little bit around the low of this red shaded fair value gap. So we're watching these levels. We just, going from the higher time frames to the lower time frames and denoting all the high time frame levels onto the lower time frames. Here, because those are important levels, the price will find support and resistance around those levels, and you have to build a narrative around those levels. We have a little fair value gap here. Why am I watching that little fair value gap? Because
Because
it's say
it's above the discount of the range.
yes. I think you mean to say premium of the range.
Yes, the premium of the range.
Yes, and also it's above the relative equal highs here. So if
Yes.
price wants to take out the liquidity, it should do it uh, targeting two birds with one stone, taking out liquidity and filling an inefficiency here. That's why. I don't see anything noteworthy on the hourly chart, so we'll go to the 15. It's fair value gap here, but more importantly, what I'm watching is not this fair value gap. More importantly, I'm watching is how price is the candle's body is respecting the order block. That's what I'm interested in,
Okay.
because this fair value gap is deep inside the order block, and it also violated the mean threshold of this order block, but it wicked down there. Wicks are permissible in my opinion. What I'm watching is how this candle closes. I would not like to see the consequent encroachment of this fair value gap to be violated again. What I mean to say is this is where it should stop. If it's supposed to go higher, I don't think it should go lower than this level, the consequent encroachment. More specifically, the body. But we'll see. I think this order block is important, so I'll denote it as a 15-minute order block. So, since you are the only one here, Daniel, how would you like to continue? Should we continue like this, or should I
Yes,
mute you?
perfect. Exactly what you're doing now is
Because I
perfectly.
think
You're going down exactly perfectly from the yes, this is perfect. It's a
okay.
nice structure to go down from the daily to the hourly to the 15 minutes and denoting everything that you see on each time frame.
Yes. Uh, let's just tape read today and not try to take a trade, because when I take a trade when I'm live, I actually, sometimes I actually don't get distracted actually. And yesterday I said it out loud multiple times that I would not be comfortable if price took out this low and then came back to the breaker. I would not be
Mm.
comfortable going short, and then I actually get went short because I got distracted. I would not like to do that again. Let's tape read today because tape reading is important. If you can't tape read, you can't trade. That's the fact.
Yes.
And if you're tape reading, I can answer questions.
Yeah.
Yes. I'm going to just log out of the paper trading. No temptations. So we're on the 15-minute chart and we are watching how price respects or disrespects the mean, the consequent encroachment of this fair value gap. I see two wicks here.
Yes.
What I'm actually monitoring is the body of this candle. I want to monitor how this candle closes.
Okay.
Let's go to the 5. Here, what I'm seeing is it's respecting. Look,
Yes.
on the 5-minute, we have a refined fair value gap. This one. And on the 5-minute, we have a refined order block. This one, this candle.
Yes.
So see on the 5-minute, the fair value gap, the refined one here, it's respecting. See the bodies.
Yes.
I'm watching that. I'm going to remove this because I don't think that's important anymore because we have a refined one. And I'm also going to remove the 15-minute one because we have a refined one.
So when you refine it down, when there's two fair value gaps, say like that, from the 15 to the 5 minutes, you usually you prefer to use the refined, the 5 minute, the lower time frame fair value gap.
Actually, I see this. I would get it back. I would, you know, take out the 15-minute order block because you have a
Mm.
refined order block.
Okay.
Why? Because I'm not using the 15-minute order block as supported resistance anymore
Okay.
because I have a refined one. But the fair value gaps, like this one, I took it off because it was, the 5-minute fair value gap is here. The
Mm-hmm.
15-minute is here. It's an important one. It's important to have the 15-minute fair value gap as well. But I actually don't like to, keep it in the chart. I'm
Mm-hmm.
actually, just eyeballing it.
Okay.
I like to keep it as minimalist. Also, we have this little volume imbalance here, which is close to the 15-minute fair value gaps high.
Mm.
So I'm actually eyeballing this stuff
Okay.
because if I see already I have so much thing, so many
Yes.
things. So if I annotate all of it, I'm going to get confused myself. It's not actually for the viewers pleasant sightseeing. I'm going to get confused myself. I usually get disoriented if I have a lot of things.
Okay.
I have to then toggle back and forth and annotate what is this, what is that, what is this one, what is that. That's good. Let's watch the Nasdaq one. If you want to bias, I think it should go higher. But let's watch the Nasdaq. Go to the daily, that is weekly buy side. See how big of a gap it made here. What it
Yes.
actually means to me is it wants to disrespect and fight against the dollar index, because dollar is making highs. Dollar is rallying with strength. If you looked at, if you remember the dollar index's daily chart, we have at least two or three bold green faced candles.
Yes.
And the only time that you have to, you know, this big of a gap means what? This black colored candles means dollar was, punching equities to move lower when it was rallying with these bold candles. When the markets closed, that was the only time that equities got to move higher. Otherwise, dollar will, punch them down. So that this act, I'm actually thinking like this in my head when I see a big gap here. So basically, what I mean to say is, I think equities will also go higher with the dollar.
Can you just say that again, please? Or when you see a
Okay.
gap like that and the
When I see
dollar
a gap
has,
like that,
yes,
what my mind is saying to me is the only time that the equities got to rally was during the market close. When the market was not open, it was
yes,
closed. They actually made it gap higher so that it can, go higher along with the dollar, because the dollar, when the markets are open, when the dollar is rallying, it will put bearish pressure on equities like this.
okay,
But since the equities are failing to move lower, we are expecting the equities to rally when the dollar is not rallying, when the dollar is consolidating or it's retracing lower. That is when we're expecting a big rally in equities, because it's failing to go lower. It's actually giving us a signal that no, I don't want to go lower. I want to go higher with the dollar. So we have to anticipate when's the time it will go higher. When is the actually time? We have to anticipate the time.
okay. Back to being time being the most important thing.
Yes. And this is actually not the time of day. This is actually, day of week and all those stuff. Day of week is important. Actually, what I mean to say is, what is the reason of this gap? I'm trying to explain to you what is the reason of this gap in
Hmm.
my head. What I'm
Okay.
actually saying to myself. I think this is the reason of the gap. When the markets were closed, that was the only time they could use to push equities higher. Because when the
I
markets are
see.
open, the dollar is rallying. It, the inverse relationship can't, help in pushing the equities higher. So this is the only time, not the only time.
Okay.
It will still go higher when the dollar retraces or consolidates, but this is actually a good time to, make the equities higher. So let's go to the 1 hour. Actually, where is this? Sorry. We have this CB here. I'll actually take this buy side liquidity off.
Okay.
Why? Because there's a much more important thing than this weekly buy side liquidity, in my opinion. What is the important thing? The new day opening gap. Now, this big gap here, this is looking big, but this is not the
Mm.
actual gap. This is the trading views daily chart gap. And we don't use the trading views time. Trading view uses a separate time, and we don't, I don't like to use that. We use the New York local time. We'll see it on the lower time frames. But what is this red one? It's the rejection block. I don't think we need it. I would like to go to the weekly now. Mhm. So I think the consequent encroachment of this weekly wick is important. And if you have any tips for me to how to use TradingView better, you can say.
No, I think you you know exactly what you're doing.
I always try to get better at this. Okay. So this weekly consequent encroachment of the wick is important. Nothing prominent I see on the daily apart from this fair value gap. And in case you might be wondering, is this an order block? No, it's not.
Sorry, which one? My screen froze for a second there.
Yeah,
That one.
whatever. If you are wondering
Yeah,
this
because
or
it
this,
didn't take why it isn't it why it didn't take out it isn't an order block because it didn't take out liquidity.
yes. And also we have this clean relative equal highs here. So even if that was an order block, I
Hmm.
think order blocks, PD arrays are important. But if the market wants liquidity, if it needs liquidity, it will violate those arrays. Liquidity comes first. That's what I'm trying to say. I mean, this is an order block or the
Yes.
two consecutive close candles. This is an inefficiency. So we have two arrays here, but the
Mm.
market went higher. Why? Because it wants the liquidity above it. Yes, it will respect those arrays like you can see here, but liquidity is first. Okay, so let's go to the hourly now. See, this is the real new day opening gap.
Yes.
Let me just check on Discord if the other member wants to join. I've also given access to the private Discord to Superman. He's helping so
Yeah.
much.
Yeah.
He
Is he
wants to
helping you?
join. Yeah, he's helping me a lot. He's doing the big work for me. It's actually
That's good.
saving me a lot of time. The other member is online, but why isn't he joining? And uh, you actually, why do I see the members, inside the zeelive? I mean, do you have to, stay there for you to
No,
get
he doesn't.
notification?
He's probably just left. He's probably just you don't have to stay there to get the notifications. He's probably just forgotten that he's on there.
Because I don't think I'm going to use that channel anymore. I'm getting pretty comfortable with Zoom now.
Mm.
So let's get back to it. This is the new day opening gap that we're monitoring. I see the body is respecting.
Yes, the bodies are respecting it.
Let's see. Member
He's
joined.
just joined. I'm going to mute myself now, Z.
No, no, you can keep yourself on. If you prefer to mute yourself, it's okay, but you can.
No, it's fine. Just for the other member.
And should I mute you too, because it would feel partial to him. You know?
Mm.
Okay, so I'll mute you. So what I'm watching right now is the Hello.
Hi, thank you, Z.
Hello.
Appreciate it. And you're
Okay.
looking at Trade Z and other gentlemen, please, you can speak, talk as well. I don't want to just hog the discussion here. But you said you identified your day differently, opening day, by the midnight and 12 o'clock candle.
Yes.
Okay, not taking the one from
No, I
whatever
don't.
is.
I look at it, but I don't refer to the trading views opening day. I refer to New York local time candles because that's where the markets work.
Okay. And you're expecting long for ES and long for NQ as well, right?
On the higher time frame charts, that's my bias, but
Hmm.
I'm not expecting anything because we have to wait for the time of day, and I don't think I'm going to be doing anything today. And I'm going to mute everyone now because I
Okay,
would like
thank
to
you.
focus. And thank you for joining, but I'm going to mute everyone now.
Can you make sure that this Zoom doesn't break? We
Yeah,
had
I
four
have made.
sessions.
Yeah, I've paid for the subscription, and now it won't break.
Brilliant. Thank you.
Thank you. Thank you for joining, and stay tuned. And guys, if there's some problem with the audio or video or anything technical, you can just say it in the chat. Can I get a yes so I can continue? Thank you. So let's get back to it. What I'm looking at is clean equal highs here. Now, it doesn't mean that whenever you see clean equal highs, that means the market's going to go for that liquidity. It engineers that liquidity for future purposes. And you have to anticipate when that future will arrive. And that anticipation is based on time of day. Like when it's not like as soon as we see we have this relative equal highs, this equal highs, so clean, there's liquidity there. Yes, there's liquidity there, but we have to anticipate what time that liquidity will be attacked. Time of day, day of week, that's the most important thing. And many people that wants to use ICT concepts, they get the price right, but they don't get the time right. Actually, they don't even think about the time. But we'll denote it as buy side liquidity now. This new day opening gap, the body is respecting it, but we should not be so quick in this judgment that the body is respecting it because this candle has not closed yet. We'll see. We'll see. Let's go to the 15. Again, the order block. And see, this is the important part about intermarket analysis because generally I would have not used, although it's kind of a good order block. It looks good. It's around the consequent encroachment. It's around the lower portion of the new day opening gap. But generally, I would not have considered this as an order block because it didn't take out the liquidity below this equal lows here. But why am I now considering it as an order block? Because of ES. Look what ES did. ES took out the low. Here. Sorry, I was doing something else, but what I'm talking about is here. There's an SMT here where Nasdaq didn't take out the low, it made clean equal lows, but ES did take out this low. So this is an important kind of an order block. but we are watching it. We're not, just buying the order block randomly. If I have to look for longs, I would look it in Nasdaq, because we have an SMT here. Not just this is an old SMT, but right now ES is willing to go lower. We also have an SMT forming right here. ES went below these lows, while Nasdaq is failing to do it. So we have a potential SMT forming right now. So all of these factors, we are, anticipating, forecasting, but we're not impulsively just saying we are long, we are short, or it's going up, it's going down. We are anticipating every factor. We are actually thinking and analyzing every factor, and we will make calculated decisions based on it. It's not just one factor. It's not just order block, fair value gap, go long, new day opening gap, go long, buy side liquidity. Not that. Let's go to the 5. We have this refined fair value gap like we had it in ES. Now, since I have muted both of you, I'm not distracted now. If I see something, I will take a trade, but that does not mean I'm going to go, YOLO or FOMO, whatever. We took a loss in our last trade. We had taken a loss in the not the last to last one, a lot earlier. But basically, what I'm trying to say is our risk percentage is minimized right now. We're only going to use 0.25% of our equity because we took a loss. And if you follow this risk management principle with discipline, you will never blow your equity. Never. Because do the maths. Whenever you take a loss, you half your risk. Do the maths on that. It gives a peace of mind that even if all my trades now are losers, I'll not blow the equity. In fact, not just blow it, my drawdown will be minimal. It does not look sexy, but it is what works. See, we have this potential SMT right now. I'm not saying that it will go higher, Nasdaq will rip higher. I'm saying we have a potential SMT. That if it's supposed to go higher, my eyes on Nasdaq and not ES. I'm going to now work with the second monitor and prompt you to the levels if I see something. Can you say again why your eye is on NQ? Because we have a potential SMT, because we have a buy side liquidity that can be attacked. Not saying it will attack it right now, but we have this clean highs because NQ is is respecting the discount arrays much more, better. I mean, even ES is in a discount, even NQ and ES both are in discount, but NQ is failing to go deep into discount, and ES is just going into, upper level discount. Excuse my English, but basically you can see it actually. Like, see here, you have this SMT here, you have a deep retracement, while NQ just wicked into it, wicked into this fair value gap. ES had a body inside it. NQ had a wick inside it. Also, we have a potential SMT. Also, we have buy side liquidity more prominent in NQ than ES. Also, on the daily chart, NQ has clearly shown that it wants to go higher. It's the stronger one. That's why all of these factors are important. In case you're wondering, this is the 5-minute fair value gap that we refined. So this is my usual monitor setup. You can see the 1-minute charts of ES and NQ side by side. I have another monitor that in which I can see the 5-minute charts of ES and NQ side by side, and I have another tab that is for the dollar index. I just have one chart there. I'll toggle through that chart whenever I want to, but this is my usual monitor setup. I think sell side is what it wants in ES. What we'll see. Now this fair value gap right here, this becomes important. Why? Because it's inside of the order block. Why bearish order block right here? Why? Because it has a CB. I mean, this fair value gap is a CB, and it's also inside this CB is inside of the 5-minute fair value gap that we outlined. So if market moves, if market does not respect it, it's a sign of bullishness. Also, we have an SMT here. ES took out the lows. Nasdaq failed to do so. Nasdaq is around the consequent encroachment of the new day opening gap, which is this black line here. wicked into the 5-minute fair value gap, Nasdaq. This fair value gap. This is an important one, so I'm going to outline it. I usually don't outline this stuff, but just for and some moments earlier when I said that I am expecting the dollar index on the 15-minute chart, I'm expecting this to be a turtle soup and then move lower and then come back inside of the range because I'm expecting the dollar to be inside of that one daily fair value gap that we outline as drawn liquidity. Let me just show it. The daily chart here. We said it was a drawn liquidity and it got delivered. Now we are monitoring the levels here. This fair value gap. I'm going to repeat what I said. I said we are going to stay within this range for today. I don't know for later if you're going to move higher or if you're going to move lower, but inside of this fair value gap, this red one, I said we're going to stay within this range. So on the 15-minute chart, I said I'm expecting this to be a turtle soup. I'm expecting it to come back inside of this range, and it did. Now, this, in my opinion, would not have been considered as a turtle soup because this is a big bull-faced candle and it even closed above it. But higher time frames are key. You should have a narrative why it should be a turtle soup. Because I'll be honest, in my earlier days, if I saw this, I would never say this is a turtle soup. I would say like this is a market structure shift and fair value gap, and I would go long here, but not anymore. Understanding of the narrative is key. Let's go back to the ES. Now, ES made a higher low here, and NASDAQ made a lower low here. So this is something that, you know, let's see. Let's see. We have a volume imbalance on the 5-minute chart on ES. I'm looking if it finds support inside of this fair value gap, inversion fair value gap, and so far it's 0.25. What the hell? Why is it 45 dollars? I think I made a mistake in order entering. I'll take a partial. First one should be here, not three, just one. I'll buy one more here. I'm expecting the consequent encroachment of this wick to be taken out, like it did. I made a mistake in order filling here. I just went long with, I don't know why, how it's like 65, but the 2.5% would be, you know, $250. Let's see. I, I'll see if I can go long again. Zero point 0.2. What the hell just happened? I don't know. Because I placed my stop loss around here, right? No, I don't get animated with this stuff, but I think there was a mistake in my order handling. I think I'm doing a mistake somewhere. $5? How? Let's go again. Let's do it for right this time. We're buying at 0.25% risk. Let's see, let's see. I don't like that. I don't know what happened there. 25, because yesterday, it's today. It got me out around break even. I don't know what the hell happened there. Was I on limit orders? I will use this. To go long again. I would want to add one more here. This opening of the order block. Let's just go near it. They got chopped up. Although it is still valid, I think my stop loss was very aggressive. This usually happens because let's look at the Nasdaq now. It's still valid. I'll go long again. It was NQ1. So I got a little disoriented. I don't know what happened with trading view back there. So we took 1.25% loss. Now we're going long again with Nasdaq. Why? Because it is the actually the relatively stronger one. We'll get out around here. Although I do think it's going up to the buy side. Actually, let's aim for the buy side. I do think it's going up there, but we'll take a partial here. We have 8 positions in, with 8 mini micro contracts in. If we lose this trade, we're done for the day. There's enough loss. We'll take a first partial half the position of here. Now, once it breaks this high, I don't want it to come back below this low. Once it breaks this high, I don't want it to come back below this low. Why? Because we have a bullish breaker, the mean threshold. It lines up with it. The thing that I struggle with personally is, timing it a little early and entering a little early. But it all pays off because the huge RRs that we get, not that I'm aiming for a huge RR, I'm aiming for profitability, but the it takes care of itself. Let's take a partial here, just one. Why are we taking a partial there? Because we just took a loss. It's nice to have some partials secured because it now, since we had a partial, we'll move our stop loss a little bit up. Not too much up. See how I'm doing it. I'm being conservative with the stop loss. You might think I'm not because of my entries. Yes, I struggle with my entries sometimes, but I'm being conservative with the stop loss. I'm not rushing to push my stop loss up. If you're watching this, don't get these up close candles. It feels nice, I know, but you should not be you know excited with it. You should be calm. Soon as I said calm, in my mind that calm down song is playing. It's very addictive actually. Now conservatively we can rush our stop loss here, but if I want to move my stop loss again, preferably I want my second partial to hit, and I'm going to move this partial a little bit low because the spread might not get us filled, might not get us filled. So I don't know why I'm wearing why I'm utilizing a headphone. I'm not listening to anything. My ears feel numb. This headphone is very tight. If you guys can still hear me, can you say yes in the meeting chat? Sorry for the constant yeses, but I would like to confirm if the meeting is still going on. Thank you, both of you. Mm. Now we have a fair value gap here, which also aligns with the consequent encroachment of the SWIG. So it's an important one. What I would prefer to see is just, you know, institutional order flow entity like we have here. Maybe consequent encroachment, maybe the whole. It's valid. Let's take 3 off here because we had 1. Now I like how the bodies are closing there, respecting it. But even if it closes inside of this fair value gap, it's okay. It's acceptable. Sorry if you heard any other, that alarm clock noise, that sound that clicks when I push an order into the market on TradingView. That's because I have other screens, and when I click on that other tab, it loads and it then you know have a noise, have that sound of order placement. I have not placed any other order. That's just the other tab loading. All the orders that you see will be placed on this screen. This is the execution window. All of the things executing will be here. Now the tab that I loaded right now is the dollar index, and it's supposed to go lower. So our trade should be on side, and our second partial just hit bagged but not tagged. But it will get tagged. Now we can rush our stop loss up to break even or just a little bit better. Why a little bit better? Commissions. Bagged and tagged. You have the small little fair value gap here, and that's why I took a partial here. But what I'm aiming for is the liquidity above these highs. Why am I aiming for that? Because this is the only time that the equities will get in to rally. I hope it's a recording because I have to post it on Twitter. So we'll hold for this level. We'll hold, but we'll also take partials and at logical levels. Dollar still has room to move lower. That means equity still has room to move higher. We'll take another partial. Here. This is called running down equity. Usually, I'll just hold one contract for this level. That's my final target. And I'll run down equity. That means take partials as we go up there. See, the market is still so much above the, my entry price. This is my entry price. Market is above here. Still, I'm not rushing my stop loss, because this is actually a good suggestion for all of you, because rushing your stop loss can take you out of the trade, when even if it goes in your direction, because most likely you'll place it wrong. Even if this is a good candidate to place my stop loss now, I'm still not rushing it. If my third limit gets hit, I might put there. But actually, in my opinion, what I think in my head is, why do I want to rush my stop loss when I've taken partial here, partial here? The third partial will be bagged and tagged here. Let's just say it. When we have taken out profits, why do you want to rush your stop loss? I mean, when the stop loss is at break even, I can chill. This usually makes me anxious. So I'll just take another partial with market order. Then my limit will hit. Whenever you're getting anxious, please take a partial, no matter where the market is. No matter where the market is, take a partial. Whenever you're feeling anxious, even if it was here when it was red a little bit, and I was feeling anxious about my trade, I would have taken a partial. It doesn't matter where the market is. Take a partial whenever you are anxious, because that is the moment where most likely you will make a mistake. When you take a partial, when you take half the position off, you lose half the amount, if even if it's a loss. And in case if you're wondering, why did I use 0.25% as risk when my last trade that we took in ES, last means today's trade, when we took in ES, was a loss? Because 0.25 is the lowest threshold risk management for me. I mean, I need to have at least 0.25% in the game, or else it needs to be everything that you're working with should suit your personality. If I'm risking too less, it will make me reckless. So 0.25% is actually very less in my opinion. Not, it depends actually on, it depends, but for me it's 0.25%. If you are the most, actually I admire this quality. If you are a very disciplined person, if you know you're not going to get reckless, if you're risking less, you can go down to 0.125%. You can go down to even lower than that. But 0.25% is actually a very good, low threshold for me. My risk management is usually like this, like the following: 1% normal risk management. If I lose a trade, it's 0.25. It's 0.5 in the next trade. If I lose another trade, it's 0.25. And even if I lose all the trades, it's staying at 0.25%. Then if I win a trade, it's 0.5. Then I lose a trade, then it's 0.25 again. Then I win a trade, it's 0.5. I win another trade, it's 1%. That is my normal one. And I try to stay at that 1%. Now, in case if you're wondering, uh, what if, we have covered partials, we have taken partials, and this trade should cover our losses. It should. It's a big one right here. So my risk management strategy is, if I cover at least half the loss that I made, suppose I made a 1% loss. So if I cover $500 of it, I can go back to my normal percentage. I think it will cover half the loss. So in the next trade, we can go back. I mean, yeah, we'll have to do some maths after this trade is over. But if it does, we can go back to the normal risk percentage. How long will you hold the trade past 11 o'clock? That is a good question because I know you're thinking that the macro is approaching. But you have to understand something. The macro initiates the move that you're already anticipating. The macro is a section of time where if price is consolidating or if price is yet to begin the move that you're already anticipating. In simple words, I'll say it in simple words. We have already anticipated this move up here. We already anticipated this move up here. Just a second. Just a second. Yeah. So what I was saying is, so can we consider this time distortion? I'll get back to this question, but I want to answer your first question now. Can we hold past this? How long will you hold trade past 11 o'clock? I'm holding this trade if it stops me out or if it hits my target. That's true. I'm not time bounding this trade. Actually, that depends, but I think it will go to my final target or at least reach up to the premium arrays. But I think my final target will hit. That's what I think. That's what I anticipate. But that's the analyst in me. But the trader in me will take partials whenever he can, whenever this it's logical. Whenever the analyst says it's a nice level to take a partial, the trader will take partial. The gambler shuts up and sits back. That's what ICT says. We have three persons inside of us. That came out wrong. I mean, what I mean to say is we have three personalities inside of us: the trader, the gambler, and the analyst. The analyst and the trader sit in the front seat. The gambler shuts up and sits back. Sorry, I go off the trail. But how long will you hold past the trade? 11 o'clock. In my opinion, I'm not considering this macro to run against me. I don't think the macro, and this is an important one, you should pay attention here. I don't think this macro will initiate today. I don't think the macro will be in function today. Why? Because we have a trending market before the macro, because we have an objective that we already determined. So this macro will, not be an important one. I'll try to be simple in my words. What I mean to say is the macro is the time that the market will most likely go for a level of liquidity if it has not done so yet. I mean, if we were here and we were targeting this high as we are doing, but if we were here and the time was 10:50, then I would anticipate that the 10:50 to 11:10 macro will run for this liquidity. But since it already did, since we've already initiated the run, I think the macro will just be, kind of in sync with the current trend. That's what I'm trying to say. I know you're thinking, will the macro run against you for your stock? No, it won't. No, it won't. Because we already have an anticipated liquidity objective. And the other question, so can we consider this time distortion? I think you got that concept of time distortion wrong. If you're saying this is time distortion, no, it's not. I don't think you're saying that. But if you're saying this is time distortion, yes, it's time distortion. It's not always time distortion. It's, retracing and moving up, retracing and moving up. It's not time distortion. Time distortion is something like, small candles, small candles, small candles, and consolidation for a long time. This is the normal level consolidation, in my opinion. If you tell me what's the example of time distortion, this is an example of time distortion. This is after 8. Are you considering those fair value gaps to hold a price above it? Yes. Actually, not these fair value gaps because these are consecutive candles, but I'm also looking at the higher time frames here. And if you ask me, this is an example of a low resistance liquidity run. What is an example of a low resistance liquidity run? Say, for example, I'm not going to change the chart right here, but if you go to the ES chart, or just stay here. Say, just a second. I'll just try to give you a better example. Try and find one, I may get distracted then. So let's stay here. Say this was the sell side liquidity objective. The market didn't reach this objective, but it reached close to it. But say it dipped lower below the sell side. Say it did. And then if you see this run, low, high, bagged and tagged. Come on, come up here. Low, deep retracement. Lower, deep retracement. Lower, deep, low. Then this is a high resistance liquidity run. While this, yeah, we retraced it. We retraced here deep, but see this. And just a wick. And this is in my example, not the perfect low resistance liquidity run, but it is an example of a low resistance liquidity run. Bagged and tagged. Come on. And when I say come on, I'm not like, being like a retail trader and saying, please, 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 please. I know it's going to be hit. And it was hit. We have 2 contracts now. Now, should I move my stop up? See how it. Take another partial here. Just for the sake of it. I have just one contract running now, and it's either take profit or it's stop loss. Actually, at this stage, when I have this situation, when I have one contract running, I actually close my charts. I mean, there's not enough equity on the line now. One is at break even, the other is like $173 in profit. There's not much equity on the line. So I actually don't care. And this is what taking partials does. It actually removes fear and greed. Even greed, yes. Like if you're holding for the full target, you're being greedy, and then you will analyze price. And even if it's reversing on you, you will hold it because you're greedy. But if you have taken out, majority of the equity, you're neither fearful nor greedy. Everyone says that taking partials makes you less fearful, and that's absolutely correct. But for me, my personality is more greedy than fearful. So taking partials helps me there. Are you considering those fair value gaps to hold price? I'm sorry I go off the trail sometimes, but I'm looking at so many things. But in short, yes. But in long answer, I think if it does not, I think the 11 to 12 and the lunch macro, it can retrace deep on the stops. If price does not reach our objective before the lunch macro can retrace deep on our stops. And where is the stop? Here. This low can be a stop. And we have this fair value gaps. Let's look at it on the higher time frame chart now, because you have to consider it. We have this fair value gap here. This may be the target for lunch liquidity. Lunch of, I'm sorry, man. I have to work on my speaking skills, but I'm getting nervous. So this fair value gap here, this can be the target for lunch liquidity. I don't think it will be. I think it will continue the run. I think it will go to the target. But let's say if it just consolidates and what you're calling time distortion, that happens right now. The lunch macro will retrace and go into this fair value gap and maybe this fair value gap. So my stop loss should stay here if I want the full target. But I think it will go up here now. So yes, in short, I'm expecting the fair value gaps to hold, but we have to consider the time of day. Time of day. That's the thing you need to consider. And I do get it wrong, like you saw on the first trade in ES. And it's actually very good that happened to us because ES is not willing to move higher like NASDAQ is. So it's actually a good thing to get stopped out there. Look at the on your 1 minute chart, look at ES and then look at NASDAQ, which is the stronger one. So this session for the day is coming to an end. I would like to answer questions now if you have any. Because this is it. I'm not doing anything more. It's either take profit or stop loss. I don't care what it does. I don't have any more levels or equity to take partials. So it's either take profit or stop loss. The stop loss is not moving now. Any questions? No, not from me. Thank you, sir. Thank you. I actually should, unmute you all so you can ask me there. Um, just a second, I will get my headphone again.
What
Hello?
do I call you? Trader
Hello.
Z? What do I call you?
Z.
Z. So Z, looking at ICT concepts,
Hmm.
I was looking at a fair value gap around 10-15, the downward one. 10, 20,
15,
20,
1 5.
10, 19, 19. This black candle coming down.
This
Yes,
one?
this one. Yes.
Okay.
So I was looking at this fair value gap based on his timing
Just a
and
second.
thinking it
If
tests this fair
if
value
I
gap
had
and
just a
goes
second,
down.
just a second. If I had more equity, I would have taken a partial right here, and you can take a partial here and then hold for the full one. Now you can continue.
Yeah. So my bias in the morning was it will take the 4 hour block and take the tops on top of that, which it did in the London session.
Hmm.
So your your option of going down, what was the logic? Can you explain that to me on the bigger chart?
Uh, my option of going down, can you elaborate?
Going up, sorry, touching the bottom and going up.
Yeah. So I think the trade is going to fulfill in this live stream. So I'll just answer your question. The first thing that I would like to say is you were actually late in the stream. So I actually outlined all the things that supported my bias for bullishness in equities, and the first member actually knows, but I would say
Sorry
it
for
again.
that.
Next time, if you are early, it would be beneficial for you.
No, I was running late and I didn't even know whether you will be up or running and all that stuff.
Did you get the notification that I sent to @paid members
Hmm.
or from on the Discord on the main text channel Trader Z? I
Yeah, I
@paid
think I would have
members.
got it, but I was just busy,
Okay.
so my bad.
No, I'm just confirming. I'm new to the Discord, so I'm just figuring out things there. So back to the question. My bias was bullish for equities because of the things I outlined in dollar that you actually missed, but that was the most important aspect. That was one of the factors uh, that I outlined in dollar. Now I can't actually switch my chart here because I'm actually recording this for Twitter. But
Okay.
if you look at the dollar on the daily chart, do you
Okay.
have your charts?
Yes, I do.
So if you go back to the daily chart, I have another monitor here, so I'm going to use that for your question. If you look at the daily chart, the 17th March candle,
17th, 15th, 16th, 17th. Yes,
yes, there's
it has
a
got a
city
fair
there.
value
There's a fair
gap in
value
there.
gap there. Yes. So I in my previous sessions, if you remember, I outlined it as the draw on liquidity. And do you remember that?
Yes, yes.
Yeah. So it got hit before the New York session opened. So I was expecting the dollar index to consolidate inside of it.
Okay.
So if the dollar index is consolidating, that that actually frees up freeze. I mean, that actually makes that actually opens up that actually opens the equities to do its thing against the dollar's trend. Now, the dollar is rallying higher for a long time. The equities are failing to go lower. So, the equities are failing to go lower. The only time they can rally, and it has to be, and when they rally, they will rally with strength because they are doing it against the dollar. And the only time they will get to rally is when the dollar is going to consolidate. So, when I'm expecting the dollar to consolidate inside of this daily fair value gap, when I'm expecting the dollar to consolidate inside of this daily fair value gap, and if you go and look on the hourly chart, that's what it's doing. Maybe on the 5-minute chart, you can see
Yes,
that's what it's
it
doing.
is.
And I already anticipated that. You can ask the first member. We already said it would do that. I already expected this run higher above the daily fair value gap to be a run on stops, on buy stops. And I said it would come down and it consolidate inside of it. So when we are expecting dollar to consolidate and the equities are historically in the past few days failing to go lower, that means this is the only time they will get to rally. And you can see how beautiful it's rallying, the low resistance liquidity run. See this.
Right.
So that's why I am so uh, keen on using the dollar analysis, and it's a very important one.
So, Z, one of the things that I am not very, I
This
wouldn't
one.
say very, but I am not a big fan of day trading. It takes a lot of time
Okay.
of mine and all that stuff.
Okay.
Is there any possibility to train us on a little bit higher time frame, 4
So
hours or 1 hour, which is not a constant up and down, running up and down? You know what I mean?
yes, I understand. You can. You
Because
absolutely
I have a
can.
full-time job, I have a business, and with all that stuff, I want to sit down on the charts, but not more than 2-3 hours. But when you get into day trading, it
Mhm.
becomes a very choppy situation and very fast. I do
Yes,
options
I
and I
understand
don't
that.
mind running options for months, right? But
So,
I
what
want
time
to make,
frames would you be comfortable executing on? Say the hourly or the 15-minute, maybe?
I'll tell you, options have to run for 2, 3 weeks. Okay. Like, for
Mhm.
example, I have put options right now for 400. I
Mhm.
looking at analysis, I think the market will not go to 400 SPY in the next 9 days. Okay.
Mhm.
It's already fallen $10. Another $14 is not possible in the next 9 days, or
Mhm.
8, 9, 10 trading days. So I did a sell of options there. Okay. And I'm sitting
Mhm.
on them. They will liquidate and give me some rent money, you know. So I like options. And if I know that market is going to go long, which I should have done in the previous month, I would have taken a long position and sat on it for 2, 3 weeks. So my
Mhm.
option is usually 3 to 4 week of return.
Mhm. I
And I would
understand.
like to study charts in that perspective. I know the market has been stuck for 30 days in the last box for the last 30 days, which was ridiculous.
Hmm.
But that would have killed me anyway.
That's why, that is the actual reason why I prefer day trading. Because even if you look at this huge bullish run here that we got here, it's
Right.
actually on the daily, on the 4 hour, on the higher time frame charts, is still inside of the consolidation. So it's the only
Right.
way we can catch moves, in my opinion. But what you're saying, that you want to trade on the higher time frame charts, it's actually possible. I don't do it because I don't have the actual patience with it. This is my full-time career now, so I can do it on the lower time frame charts. But for you, I think it can be done, but it takes a lot of time and it takes a lot of patience. And you're talking about options. There's a final target, but you're talking about options. I'll be honest, I don't have any experience with options. I don't even understand options.
No, no.
But
I don't need you to understand options. What I need you to tell me is this going up and or down, you know? And not only ES, but other stocks as well. Like, we missed a Nvidia run, right? NVDA. I knew the market is going to come out Nvidia. It's going to be amazing. It ran at $100, today.
I've not seen that. I don't look at stocks.
Acha, okay. So you
Where are
don't
you
look at
from?
stocks. I am originally from UAE. My parents are from Delhi and Karachi.
Okay,
Mixed breed.
okay, okay. Good, good. So,
So so you look only at ES and NQ.
what you said right now? Okay, you want me to tell if it's going up or down.
Like, NQ had a great run, right? If I look at the weeklies, it was mind-boggling that I wouldn't have traded it.
So I
But
want
my
to understand
confidence was
something
not
here.
there.
Uh, are you here to learn or are you here for signals?
I'm here to learn.
So
Signals,
you
I have
should.
many services I could go for.
Sorry?
But I said signals, I can have many services to go for. And the reason I'm asking you to learn is, I'm not asking you to say go long, but I want the reason behind it as well. Why? What are you looking at? Where am I wrong? What is am I doing right? So tomorrow I can be something I can do by myself.
Yes, that's what I'm trying to do here. I'm trying to explain everything here.
Yeah. I mean,
But
so I get
if
it.
you're
I
expecting me to
translate
say
your,
go long here, go short here, I mean,
no, no.
you're not going to learn
I'm
if
not
you want to
asking,
see where to go long, where to go short. You only care
I'm
about the
not
money
asking you
then.
to tell me, but like, for example, I have a perspective. I would like to discuss it with you, like you're discussing with me right now. Why, where, this is done this. Now this is the order block. This is going from here. Now we expect this to go higher from here. So then I can say, you know what? I have a confirmation from a guru that this is happening. So I may be right or I may be wrong.
I'll tell you what, if you want to learn, just come here every day. I'll do my live streams. You'll be on mute. Everyone will be on mute. I may take some questions after I do my stuff. I'll explain everything what I'm doing. I'll explain all the logic. We'll tape read. We'll try to understand the markets. That's what we do here. But I actually don't like, other like you said, this other group is doing something. I actually don't like confirmations. I don't even like confirmations for anyone. I trade discretionary. I trade on my
I'm
own.
not saying
I
any other
don't see
group.
other people.
You asked me whether I am asking for signals. I said Many groups are there for signals. If I wanted signals, I would go and get signals. But I'm not trying to get signals. I'm trying to learn.
Yeah, that's a good thing.
Yeah. Because signals are
So,
available. Everybody is selling signals, you know.
so the best way to learn, yeah, everyone is selling signals, but you can see how many of them are working and how many of them are not.
Exactly.
You know that.
Yeah.
So what
And
I'm
why did it fall all of a sudden now? Because it got the objective.
because it took out liquidity, the objective has been reached. It took out liquidity, so we can expect some kind of retracement.
Can you
It's
explain
normal.
where did liquidity? Because
On
I'm
the
not on ES,
hourly,
on ES.
on ES, I didn't have a clear level. That's why I didn't trade with the ES. But in Nasdaq, just
Yeah,
a second.
Nasdaq I can see liquidity. I cannot see it in ES.
Yeah, wait a second. I don't have my ES charts right now. Nasdaq didn't take out the liquidity. It just filled the inefficiency as we anticipated because Nasdaq was the less stronger one. ES, Nasdaq, sorry, I said it wrong. Sorry. ES didn't take out the liquidity. ES just filled the inefficiency because ES was the less stronger one. Nasdaq did take out the liquidity as we expected.
Exactly.
And now we don't
And
care.
all
We
of
are done for the day.
okay. Because I was in ES trade.
Tell you what, just every day, if you want to learn, if you have time actually, because I don't think you have time, you want quick results, and I don't think I can provide you quick results. It will take a time.
No.
It will take a lot of time to
Boss,
learn actually.
you are filling in the gaps. I spend 3-4 hours in the evening doing this only.
That's good.
Okay.
That's good.
Right. So what I'm trying to ask you, if you can also help me analyze a bigger time frame, like a daily and weekly.
If
Like look
I
at
start,
ES.
if I actually learn the lower time frames, and the higher time frames will be a piece of cake for you, because the
Okay.
lower time frames are the difficult one. If I actually start teaching the higher time frames, the one trade will form in 1 month, and it will not be
Understood.
as beneficial in your learning. The lower time frames, these candles right here, they form on the higher time frames as well. These candles can be on the 4 hour time frames as well. If you understand it on the 1 minute, you can, actually make better decisions on
Did
the.
that yeah. Good. Understood. Thank you.
Thank you very much for joining. I'm going to close the stream now. Thank you for
I'm
joining.
leaving. Thank you.
Thank you very much.